Hey guys, welcome back to the channel. I'm Franco Shy, and this is To Whom It May Concern. Remember to like and subscribe to the channel to help us grow and to get us in the algorithm so this message can get out there as quick as possible. So, a lot of people have been asking me, right? Like, I don't have the investment capital to invest, and and this is only for people that's in the U.S. So this, what I'm saying is not financial advice, and everything on this video is entertainment purposes. But the question came about like, hey, I don't have money to invest, right? And so, because I don't think you really start seeing returns until you have about 25K to to invest. So I did the analysis for you guys, so you guys won't have to do the analysis. And on $100,000 salary, let's say, for instance, if you make 100K a year, right? And I based it on that because a lot of people say they make six figures, so I based it on a six-figure salary. If you if you make less than six figures, I'm sorry about that. Let me know in the comments if you want me to do analysis on what you make. All right. So that'll give you about, after taxes is about 70,000, and disposable income after you pay your bills would be will leave you about $1,000 a month to invest. Right. And that's not to play with, but just solely to invest. And excuse anything if you hear sirens. I'm in New York. I'm here to see the Shakur Lopez fight Saturday. So if you hear sirens, that's what that is. Um, so it gives you about $1,000 a month to invest. So and to accumulate 25K, it would take you 3.5 to 5 years to save $25,000. And so a lot of times within that 3 to 5 years, if you want to invest in a particular stock or a particular cryptocurrency or whatever you want to invest in, asset prices normally go up 10% a year. Normally, if we just pin it on the S&P 500, right? So 10%, 10 to 15, let's say 10 to 15% a year. And so you will lose out you will lose out on 3 years of opportunity that you could have had invested to help grow, right? Your capital would have grown 10 to 15% in those 3 to 5 years that you were saving. So you would miss out on that upward potential of earnings. And so what I did when I started to invest, and what I still use today, like literally today, is I leverage my credit. So the first thing you need to do, right? Step one is you have to have a job. You have to have a job to pay back um anything. So step one, have a job. Step two, have about 600 to $800 a month that you could spare. So we'll say 400 per check, right? So you pay twice bi-weekly, so you will have $400 per check that you could utilize to help pay off the loan, right? So what we want to do, the theory is not the theory, but yeah, we'll say theory. The theory is you want to leverage your credit score. So second step would be to enhance your credit score so you can have a better interest rate on that said personal loan that you're going to use, that you're going to borrow and then use to not buy things or liabilities, shoes or trips or anything like that. But you're going to use that loan to actually invest in, put capital in the market. So that's what you want to do. That's the quickest, easiest way to make 25,000, to leverage your credit, right? Your God given birthright as an American. Right? So the guru, some would say, credit is trash, but when you utilize it in the right way, right? If you're buying real estate, If you're taking a personal loan out not to blow or take a trip or buy a liability, but buy assets with it, right? Then you utilize that money to invest, and your return will be 10 to 15%. And you want to have an interest rate obviously lower than the 10% that you're making uh, a year would be your returns on your stocks. I would say, not financial advice. If you're new to the game, the easiest and safest way was just to be invest in the S&P 500, and you'll get those 10 to 15%, 9 to 10. Just depends on the market and where it's currently at. 9 to 10% a year um, return on your investment on your capital. So I wouldn't put that in a money market account. I would directly uh, dollar cost average DCA into the S&P 500, and take that disposable cash that you would have used to save and just pay on that loan. And in the long term beta analysis, it pays off because you got in at a lower price than you would have if you would have saved the 3 to 5 years, that 25,000, and got in, because the asset would have ultimately went up in price. So that's the quickest and easiest way to get to 25,000 is leveraging your credit, have a job, leveraging your credit. So don't be afraid to leverage your credit in order to get a personal loan, in order to be able to invest in the market, man. There's no scheming, no scamming. Do your research on what bank or what entity, financial institution that you want to borrow against or borrow from, and look at the interest rates. Look at where you will put that money if you were to borrow that money, and what will be the difference between your interest rate of your return, your ROI, versus the interest rate you're paying on that personal loan. So if you want more information about things of this nature, of how to leverage your credit in order to invest, let me know in the comments. I'm in New York. If you're in New York, hit me up. Let's get it. All right, people. That's it. To whom it may concern, remember to like and subscribe to the channel. I love you guys. I would never steer you wrong. I would never ask you to do anything that I'm not willing to do. And that's 100. Peace. See you guys next time.